since we can never have a book value that goes below the salvage value. Yeah, the test is, I think, the 23rd.
Yeah, that would be Saturday, I guess. Yeah.
Yeah. I had a good review. Hello, John.
Good morning.
How you doing? We didn't knock you out with the first class, huh?
No, I think I can handle this.
Okay. I guess it's review time, huh?
Yeah, I think so.
The test is on, so, okay. How about I throw up the PowerPoints and I'll go through them fairly quickly for the first couple of chapters and then go from there. How's that sound?
Sounds great.
Okay. Yeah, hold on one second here. Come on.
While it's popping up, I noticed that the Syngene book loves to ask definitions. Is the quiz sort of that way as well? Lots of.
Yeah. Especially like the first couple of chapters where there's not that much with the numbers, you know, where they talk about the different steps in the accounting process. They love that. And the other one they love to put on is the one where they ask what specific columns do what in the 10-page worksheet.
Okay.
You know, for some reason, that's what they blew out at us last time. So, all right, let's see what we got here. Chapter 1. I did get a peek at the test, and I'll take another look at it before we get done here, just to see if there's anything that we might have missed. The test is almost evenly divided among the 6 chapters. You know, like 12 questions each, something like that. Okay, let me share this with you. Share screen. Okay, you see now, right, John?
I can see it.
Okay, introduction to accounting. Huh? How come you didn't take 240, John? You could have knocked all 3 off in one semester.
Yeah, that would be a little tough, but I selected this one, and then when we got started, I noticed the other one was sort of a co-advisory. I thought, to be honest, it had a little more broader. It looks like it's almost the same as 130, but
yeah.
It's actually helped reinforce the concepts because I get it 2 different ways.
Yeah, you know, it's good practice. Yeah. All right. The purpose of accounting, it's the language of business, huh? They like to take a question from this screen here, right? Who is interested in the financial statements and for what reason? Okay.
Okay.
Creditors, of course, they're not going to loan you money. Managers may have a very specific incentive. So they want to know what's going on in fairly good detail. You know, your salespeople might be making a commission. So they want to know what's going on. The overall health of the company is the owners. And then, of course, your tax authorities. Now, here we go with the definitions. Accounting is gathering financial information about a business. And then you got these steps: analyzing, recording, classifying. If you ask me to put these in order, I'd have trouble, to be honest with you, John. But they do like to ask what these different things are. So this screen here should be helpful to you to look at. Analyzing, recording, classifying, summarize, reporting. GAAP, generally accepted accounting principles. FASB, Financial Accounting Standards Board. GAAP are the people who make up the rules, and the rules are promulgated by the FASB. That's a group from the American Institute of Certified Public Accountants. So they might have a question on that. And they talk about how they identify an accounting issue and they place it on the agenda. For example, department stores used to sell gift cards, right? And then some of them were never used. And they would treat that as income. They can't do that any longer, John. They have to make a good faith estimate on estimating how many credit cards will not, how many gift cards will not be used. And that's an example of FASB recognizing an issue and coming up with some new GAAP rules. 3 types of business, no problem here, right, John? Sole proprietorship, partnership, corporation. Activities, service, merchandising, manufacturing. Service, what's a service business? Merchandising buys and sells a product, and manufacturing builds a product. That's 240. And then they talk about career opportunities. I don't think any of this would be on the test, to be honest with you. So I don't know how much they can haul out of chapter 1, you know, John?
Yeah, I noticed when we did the quiz in chapter 1, they did ask 3 or 4 questions around, you know, what's a bookkeeping do and what's a clerk do. So I wondered if that was going to be on the test.
It could very well be, yeah.
Yeah, because there's just so little material.
Yeah, that one's hard. That's not a fat one. Let me pull up chapter 2 here. Chapter 2. Chapter 2, where's chapter 2? See the screen, John?
I can see it.
All right, here we go. Chapter 2. Here we got into the world of increase, decrease. Hold on. Let me get. Yeah. Here we got involved in the accounting equation. We know what that is, right? Assets equals liabilities plus equity. A business entity is any organization involved in economic.
I'm not seeing anything now. I'm just seeing it just says canvas.
Oh, really?
Yeah, I just see your
Oh, yeah. Hold on. I didn't realize. I thought that would follow. Okay, hold on. Zip-a-dip-a-doo. Come on. Okay. Wish me luck, huh? Chapter 2. Oh, there it is. There you go. See it now, right?
We're in business now.
Yeah. Okay, business entity. The business entity concept is that a business is involved in economic development and it can be measured in terms of dollars and reported upon. Assets, accounts receivable, liability. You stop me if you have any questions here. Accounts payable. Don't confuse AP and accounts receivable. Easy mistake to make if you read the problem too quickly. Note payable. Note payable, that's a written agreement, whereas accounts payable, there's no written agreement. Owner's equity. And then we went over the accounting equation and we started to put these various transactions together. Show the effects. And remember all this stuff now? Mitch took $5,000 from his bank account. Cash went up, capital went up. And I'll skip through these transactions. Do you need me to go over any of these at
No,
all?
I think they're fine because we hit them so many times on chapters 5 and 6.
Oh, yeah. Let's just, okay, revenue. We know what revenues are. We know what expenses are. Periodicity. I love that word. The notion that any business can be broken down into a finite period of time for analysis. Withdrawals. You're never going to see withdrawals after this test, John. So yeah, I see a little reason to go through these. Like you said, we've really hit these hard, you know?
Yeah, I figure they'll probably ask some of those definitions in this section,
Yeah.
If I remember from the quiz, there was like, each of these was an example of, historical cost and business entity. And what was the concept where you keep your
John,
personal-
can I pick up this phone call? It's my boss. Could you hold on, please, John?
Yes, go ahead.
Hi, Cornelia.
Hi, Bob. Sorry, am I disrupting you, your lecture? So I didn't look what time it is.
Yeah, I'm in class right now, but yeah, I'm working.
Okay, please remind them that there's no hangout today.
Right. No,
And I was hoping that you might be able to send out notices to the class, because I'm not sure if I can do that. I forgot to do it, and if I can do it on time.
not a problem. I'll get that done.
Okay.
Yeah.
All right. Thank you.
Okay. See you. Bye-bye. There we go. That was the boss, John.
Always answer the boss's phone call.
Have you met Cornelia, or probably not yet?
I met her in our first class in, she was online, but that's the only time I met her.
Okay. She's been very good to me over the years. And we're familiar with the financial statements, right? The income statement.
Yep. I figure they'll ask the order, income, owner's equity, and
Yep.
balance sheet.
That's very important. And by the way, you were asking what kind of questions they ask in chapter 2. They're going to give you a transaction, and they're going to say something like, the company paid cash for an insurance policy. And then they're going to have 4 choices, and the right answer will be assets did not change, because you just exchanged one asset for another.
Got it.
Yeah, or they'll give you 4 and they'll say something increased, something decreased. You have to pick those out. But those shouldn't be too tough. Okay. All right, let's get into now it gets a little bit meatier when we get to chapter 3. Okay, let me get out here. Chapter 3. Oh. Okay. Okay, you see chapter 3 now, double entry?
It's up.
Yep. Well, here we introduce you to the T account. Debit credit means left and right. And the T account mimics the general ledger. And there's the T account left and right. And you have one of these for each account. T accounts. No matter how long you work in finance, you could be at a meeting with a bunch of CPAs going over a problem, and inevitably somebody would run up to the blackboard and start throwing T accounts up to figure it out. So it's a useful thing. You know how to foot it and come up with the balance, I'm sure, right?
Yep, and then I know the definition of the footing is the subtotal on each side and the
Yeah.
balance is,
Yeah, they may ask that type of thing. Are you good with your debits and credits now?
yeah, I feel pretty solid on those.
Yeah, without that, we're dead. Here we go, cash. Debit and account asset. And, I presume you know that assets have a debit balance, liabilities, credit goes up with a credit, owner's capital. Study these five, the rest of you guys in the class, go over these 6 slides here, huh? This is a good slide right here. You don't have to memorize 3 columns here. All you need to know is normal balance on the right. Normal balance. That means the side of the T account that increases. So assets have a normal debit and et cetera for the others. And then they did some debit and credit transactions. And I don't think you have any trouble with these, do you, John?
No, I feel pretty good about those.
Okay, I think the rest of the class should be in pretty good shape.
Yeah.
I've been checking a little bit. I'm getting some traffic on these. As you know, I copied these over to my website and onto Canvas. I'm starting to see more and more people, accessing. So, paid the phone bill. Yeah, a lot of, not a lot, but some of the questions in chapter 3 is they're going to give you a transaction, John, and you have to pick the right journal entry. In other words, the company sold something on account, and you have to be smart enough to know that it's a debit to accounts receivable and a credit to revenues. And they'll give you 4 different choices, okay?
Got it. So, or like if they said the owner did a drawing, you would say it would be a debit to drawing and a credit to cash.
Yes,
Yeah,
exactly right. Exactly right. And that'll be the last time you ever see drawings for the rest of your life. And the trial balance, we know what the trial balance is. It comes from the general ledger balances. We just bring it over, add them down. If they agree, we're happy until chapter 4 or 5. And, you can see, remember everything under drawing is your income statement, right? Everything above the delivery fees is your balance sheet. And the only number that's going to change is capital. And they're showing you the flow from the income statement. You get the net income. That's why you do the income statement first. Then you move the net income over to the statement of owner's equity. And then when you get the new owner's equity, you step on the capital number right over here. And that's that for chapter 3. Chapter 4. Chapter 4. Okay, I think I got it for us. Okay, there we go. Journalizing and posting transactions. You see it, right, John?
I can see it.
Okay, here we just talked about journal entries, huh? The flow. You're gonna enter, you're gonna find something transactional. You're going to enter it into the general journal with a journal entry, then it goes postage to the ledger and then to the trial balance. The purpose of source documents, well, we got a pretty good understanding of that, I believe. The chart of accounts, a list of all accounts used by a business in numeric order. They are in numeric order and they're set up in the same order as assets, liabilities, equity, revenue, expenses. Journalize the journal entry. You see where that red arrow is, and they say the year is only written at the first line of each page, John? That question was on the last test.
Really?
It
Do
surprised
they
me.
also ask on the like on the balance sheet, is the dollar, where's the dollar sign go and the double lines and all that?
No, none of that stuff's gonna be on. No.
Okay, but they do ask about the top of the sheet having the date, the month.
Yeah, they did ask it one time, and it struck me as an odd question, but journal. So we know how to write journal entries, I think. Now, this is for you, John, the rest of the class. I have another review I did on these chapters where I went into too much detail. So I can send up both videos if you guys want.
Okay, that's a good idea.
Post to the general ledger, prepare a trial balance. See how it looks just like the general ledger, huh? Your general ledger is nothing more than a double T account. One for the activity and one for the balance. Posting to the general ledger. Trial balance. Not going to worry about correcting errors. I don't think you get anything on that. You can never erase. Just remember that, John. That's important. You can never erase or blot it out. All you can do is reverse the first entry that was wrong and then do it right. And that's pretty much chapter, what was that, chapter 4? Now we get into some more interesting stuff, I'm going to say, in chapter 5. Chapter 5. And just hold, John, I just want to reply to one of my bosses. Okay, let's see what we got here. Chapter 5. Chapter 5. Okay, adjusting entry, chapter 5, right, John?
I can see it.
Okay, now here you might have some questions because now we get into a little more tricky stuff with the adjusting entries. At the end of the month, you know you're going to have to adjust the trial balance for things that can only be recorded at month end. And these are internal type entries. There's no third parties involved. We're not dealing with another company. We're doing these internally because we have to wait till the end of the month. So let's talk about them. Revenue recognition principle. Been over this a bunch of times. You recognize revenue and expenses when they take place. not when they're paid for. And the matching principle, you match revenues and expenses. And any test I would give out in this chapter, I would have that question on there because that's so important. We know what a fiscal year is. It can be any 12-month period. And then we have our different adjustments. Supplies, we had 80, and now at the end of the month, we counted only 20. So we used 60. What's our journal entry? We're going to debit supplies expense and credit supplies to get the balance down to 20. We do the same thing with prepaid insurance. He paid $700 for a 10-month policy. That's $70 per month. We're going to debit insurance expense, credit the prepaids. So wherever you have a prepaid account, you know you're going to credit it and debit the appropriate expense. Wages. Here, they have an additional $400 that's not been paid. Let's take a look at the general ledger here. Notice the 1650 number that's already up there per trial balance, preliminary trial balance. That represents the payroll that they actually processed and paid. This here, 400, these were hours worked on the last 3 days of the month. And they're not going to get paid until next week, next month. But you have to record that expense this month with a debit to wages expense and a credit to accrued wages payable. Historical costs, I'm not going to talk about that anymore. Useful life. Depreciation, we know what depreciation is all about.
Yeah, and obviously they'll probably ask us about a contra account if they.
Yep. Salvage value. Straight line depreciation, you just take the amount you paid for the asset, you divide it by the useful years, okay? Keep in mind that you do not depreciate the salvage value. You do not depreciate the salvage value. So here there was no salvage value. So you have 4,800 divided by 60 months. Every month for the next 80 months, for the next 6.5 years, you're going to debit depreciation expense and credit accumulated depreciation. Some new. And now we know how to post to the ledger. I don't think I need to go through that with the class. We know how to post. You don't have any problem with that, right, John?
No, I'm pretty good with that. That's straightforward.
Now here are some questions on the test. We have this 10-column worksheet. And for some reason, they'll ask this question. What's on columns 5 and 6? And you have to think for a second. 1, 2, 3, 4. That would be the new trial balance, the adjusted trial balance. If it was 9 and 10, it would be the balance sheet. So be prepared for that. And let's see if we can find the worksheet here. Yeah. You see that, everybody? The worksheet? On the test, they'll say, what is in columns 7 and 8? Let's see, 1, 2, 3, 4, 5, 6, 7, and 8 is the income statement. 1 and 2 is the trial balance, the unadjusted one. 3 and 4, the adjustments, the adjusted trial balance. Then 7 and 8, the income statement. 9 and 10, balance sheet. I just have a feeling that those questions will be on there again.
Yeah, I know the quiz had about 3 definitions of it and 2 matchings.
Yeah. It's like I said, I don't have any real control over the test because with Zoom here, all the problems I put together for tests, we can't do. So we're relying on the test bank to give us a good random sampling. And there's the worksheet when we get done. And remember, everything below drawing is your income statement. Everything above it is balance sheet.
Yeah, I know when I was doing the exercise that I had to be real careful that I would grab the adjusted trial balance when I was moving over to columns. I kept wanting to grab column 1 and 2.
I know. And I still make that mistake when I go too quickly. Yeah. Yeah, you go through all the trouble of adjusting to a new trial balance, and then you don't use it. You end up starting all over again.
Yeah, just so many numbers on the sheet that your eyes go
Yeah.
to the left side.
Yeah. Finding errors, we're not gonna worry about that.
And then at the bottom of the worksheet, I think I have it, but basically for either net income or net loss, you basically are squaring up the
Yes.
yeah,
Yes.
that I wouldn't mind going over for a second.
Yeah. Well, you know, the first columns 1, 2, 3, 4, 5, and 6, they have the balance. Now, since we're only bringing the income statement items over to the income statement pair of columns, we don't want them to balance. We want to see a big number on the right side, the credit side, right? So in this case, we had sales of 8,000, expenses of 3,360. We're going to take that 3,360 and come up with the profit of 4,640, and then we just add it, like you said, to square it up. And if we did things correctly, when we come here, we're going to be off by the same exact amount. Only this time it's going to show up as a credit.
So you basically sum across, let them not match, and then the line below is where you do the net income or loss.
Yeah. Just to true it up. Yeah. So here's, journalizing. We know how to write journal entries. And that's pretty much it with that chapter. Chapter 6, closing entries. Closing entries. Boom, boom, boom. That goes there.
Do we have to know anything on the I assume since we're being taught accrual basis, we don't have to know much about cash basis or modified cash?
Oh God, no.
Good.
No.
Okay.
If you, I'm telling this to the whole class, whoever might be looking at this, if you see a problem asking about the modified cash basis or cash basis, let me know immediately after the test, and I'll make sure you guys don't get dinged for that. But no, you should not see that.
Okay, great.
Can you see it now, John? I'm not sure I shared
Yes,
it.
I can see chapter 6.
Okay. Now, chapter 6 here is essentially preparing the statements, huh? We're going to prepare the journal entries, the header. You know the different, you know the headings on the balance sheet has to say as of a certain date, right, John?
Right. It's the it's either just the date or as of on the balance sheet, and the other two it's for activities of or something like that.
Yeah, for the month of would be okay. Yeah. Yeah, the balance sheet is just a snapshot in time. Income statement, we know how to do. Yeah, I think we've been through this enough, huh?
Yeah.
Where we will concentrate with this chapter more heavily will be with the closing entries. So I'm assuming that the class knows how to take the trial balance and prepare the appropriate financial statements, okay? Know what current assets are, current liabilities, long-term balance sheet prep. Okay, let's talk about closing entries, closing journal entries. At the end of the month, we have to zero out the net income from the income statement over to the balance sheet. That's what we were doing in columns 7 and 8 and 9 and 10. So the way we're going to do that is we're going to have to zero out all of the temporary accounts. You have permanent accounts and temporary accounts. Temporary accounts refer to anything on the income statement. Anything else is a permanent account we don't close. So we're going to close the revenues and the expenses and the drawing, okay? How do we do it? The closing process, 4 basic steps, and I cannot improve on these 2 slides here. 4 steps, people. Close the revenue accounts. Revenues have credit balances and increase owner's equity. So we have to debit the revenues to get it down to 0. So once you do that, you are putting into the income summary account the sales. There'll be a credit balance there. You do the same thing with all the expenses. You list them all, you credit them, and then you debit the income summary. At that point, you obviously have the net income in the income summary account. Then we close the income summary to owner's capital. You're going to debit the income summary, hopefully, and credit owner's capital. And now we've moved the profit into owner's capital. And then we close the drawing with a credit and debit owner's equity because it reduces owner's equity. And here's what I want to show you. See what they did here, guys? Revenue. You debit revenue for 8,000 and you credit the income summary. You credit every single one of these expenses, and that goes up to income summary as a debit. At that point, you've got the profit sitting there of 4,640. We debit that out and we credit capital up here. Capital. And then the drawing goes out with a credit. Okay. This test should not be a buzzsaw, I don't believe. Hold on. And here's the journal entry. Take a look at this. Simple as that. Notice they listed all of the expenses, credits, debit for the expenses in income summary to clear them out. And then you run a post-closing trial balance. There might be a question on this, guys, where they ask you what is on the post-closing trial balance. It will only be the balance sheet because you've closed the income statement. Once you've closed everything, you have 0 expenses and revenues showing as the beginning balance of the month, which is correct, which is what you want. Of course, as soon as you start business the next day, it starts over again. Okay. So the post-closing trial balance is just balance sheet items. And then we're back to this again, the steps in the accounting cycle. And we're not going to get into the cash flows. Okay, let me do something else here, John. Okay. Let me go in and see if I can find something else that'll be helpful to us. Oh, yeah, boy. Excuse me. Okay. You still with me, John?
I am.
I'm not going to show this to you deliberately, so let me just give a few pointers out here. Yeah, those are those steps, John, at the beginning, you know, those steps in the accounting process.
Okay.
I didn't go over nonprofit in this review today. We understand the nonprofits, John? That's your churches, hospitals, educational institutions.
Exactly. Yeah. So, I assume government agencies are not considered nonprofits. It'd be basically just
No.
hospital. Right.
Right, right. The government would not be nonprofit.
Right.
I guess, I mean, not that they're looking to make a profit, but they
Right.
have totally different rules. So you have GAAP rules, you have nonprofit rules, and you have government rules.
Okay. Got it.
What I'm doing is I'm scrolling through the test to see if there's anything I think is a clunker. Yeah, when they get to chapter 2, they say so-and-so bought an insurance policy. What is increased and decreased?
Got it.
If my class gets less than a 90 on this test, I'm going to be pretty annoyed. I'm going to make you all come into school, COVID or not. Decrease. Yeah, the first half of the test, it's a lot of transactions where they say what increased, what decreased in terms of assets, liabilities, equity, revenue, whatever. Oh man, you guys should do great on this. Looks like it's a long test though.
Yeah. It said the scheduled time was like an hour and a half or I was surprised how long it was listed.
Yeah. I'm scrolling through it now.
Yeah, it was listed as a 2.5 hour test.
Well, I can believe it. I'm not even halfway done scrolling and I'm on question 50. They have a section. This is where Cornelia and I always have a discussion. You know how sometimes they have these long questions and all of a sudden here they're asking you to write 8 journal entries, freeform them, and yet the problem supposedly is only worth 1 point. I give more than 1 point for it though if you do attempt it. Most students wouldn't even try to do that problem. I don't think I would, to be honest with you, taking the test. Take up a lot of time. Ledgers. Now on question. Yeah, there's 2 different sets of journal entries they're asking you. John, you want to save those for the end.
Okay.
Do all the multiple choice ones first. Then if you have a lot of time left over, then you can attack them. And also on those kinds of questions, I give partial credit to. Information. Oh, pardon me. Wow. Question 66. Yep, they ask you to do a couple of adjusting journal entries. And there is a question on this thing with modified cash basis. It's a long. Using. Yeah. That problem probably don't want to do. Good Lord, what a long test. Yeah, they have a couple things about modified base, but don't worry about that. Everybody gets credit for those.
I've assumed this is a closed book, closed notes, no index card with a formula or anything like that.
Let me talk to Cornelia. Our attitude is if you want to use the textbook, go ahead, but it may not help you as much as you think because
Yeah.
you're going to waste a lot of time fishing around.
Yeah. I just didn't, I've always assumed it was closed,
Yeah.
but if it wasn't, sometimes they'll ask a definition or and if you want to double check, I didn't know if we were allowed to. So,
Yeah, I'm going to say you probably are allowed, and I'll double check with the boss. Okay, well, it's 100 questions. I don't see anything here that should knock you for a loop, John.
alrighty.
So my advice in taking the test for everybody is do the multiple choice questions first, then worry about those long ones, okay? And if you do one of the long ones, you'll get double credit. That'll be worth 2 points at least, okay? Instead of just one.
And on the test, it basically has like a skip and save, or you just go to you just arrow over to the next one.
Yeah, I think so. Yeah. You go in there, you call up the test, and then question one will be there. You answer it, and just click an arrow to go to the next question. Yeah, if that's what you're asking.
Okay. Yes. Thank you.
Yeah, it's pretty user friendly. So, and the reason I think it's pretty user friendly is we haven't had any complaints lately with somebody telling us they got locked out. All right then, John.
I think it looks great, and I appreciate your time. So,
Okay, well, this one will be up on the internet in a little while. Okay,
sounds great. I'll talk to you on Friday. Bye.
Friday. Hey, you take care. Bye bye.
Bye bye.